Why are there so few homes available for sale in Toronto's real estate market? That's the question I'm going to be looking at today. My name is John Pasalis, president at Realosophy Realty. You can catch all my latest writings on Toronto's housing market at movesmartly.com. If you find this video helpful, please hit the like button and subscribe to stay up to date on all my latest videos. So we just got the latest data for September's housing market in the Toronto area. And there were unbelievably low number of homes available for sale, just under 5,000 low-rise houses available for sale in September, in a month where there's usually around 11,000 homes for sale. So the question, of course, is, well, what's driving this? You know, a lot of the things that we hear about in the news is supply. The problem is we need to build more homes. I mean, this is a bit of a silly reading of the data because I mean, when demand surges, we can't build fast enough to accommodate shocks in demand. And we're going to look at the shock in demand a little bit now. When we look at sort of the volume of listings versus sales over the past, for 2021, actually. So when we look at the number of houses that have been listed on the market in 2021, and we compare that to the 10-year average, we can kind of see that we're just above the 10-year average. So new listings volumes are not particularly low. They're strong, but the challenge is that sales have outpaced listings. When we look at the number of houses that have sold in 2021, we compare that to the 10-year average. We see that we're well above the 10-year average. Sales are 26% above historical norms. And again, this is really a demand shock that's been caused by COVID, that's been caused by low rates, that has pushed way more people into the housing market than is typical. And it's this demand shock that has basically absorbed all of our available inventory, or a lot of it, that is leading to this really, really tight market right now. Now, the other challenge, again, when we think about supply and the lack of supply, it's important to kind of differentiate, well, what do we mean? And most economists and housing analysts talk about a lack of supply. They're talking about, you know, basically building new homes and adding more housing to our market. Now, the challenge, of course, is when you think about the dynamics of the housing markets today, you know, we're not really concerned about the home that's going to be built 5 years from now. When we talk about the factors that are impacting the housing markets today, the supply that we're referring to is the number of new listings of existing homes. So the number of properties that are coming on the market for sale. And in this regard, the fact that new listings are actually at the same level as the 10-year average is problematic and a little bit puzzling, because when we see a surge in demand, like we've seen this past year with sales up 26%, well above sort of the historical norm, we would expect to see an increase in new listings, because you have to imagine those thousands of additional buyers, many of them are actually still homeowners, and they usually have a home that they need to sell to downsize or to upsize or to what, you know, whatever they're doing. So we would normally expect to see an increase in new listings when we see a surge in demand. We haven't seen that. So the question here is, why are we not seeing this increase in the supply of existing homes coming on the market for sale? And my feeling is one of the key drivers behind this, and the reason we're not, is a disproportionate number of people in the Toronto area housing market, when they're upsizing or when they're downsizing, they're trying to keep their existing property as an investment property. You know, this headline from a Bloomberg article basically was reporting on statistics from a report from Equifax, which is a credit rating agency, that found that the share of basically properties that were being bought by people with more than 3 or 4 mortgages was outstripping any growth in demand from first-time buyers. So the people who are buying, you know, multiple properties, they're the ones that saw the biggest increase in sales, you know, over the past year relative to first-time buyers. So we have a lot of investors buying properties. Recent data from Canada's Housing Statistics Program showed the exact same trend, that we have a huge interest in investors buying properties. And when we have a lot of investors not just buying properties, keeping their existing homes, and sort of not putting that inventory onto the market when they move. So they're just renting out their home, or if they live in a condo, upsizing to a house, they're just holding on to that. And we can sort of see this in the number of new listings for low-rise houses in the city of Toronto. So unlike condos, where a lot of the increase in rental listings over time is driven by new condo completions, in the low-rise home market, we're not building a lot of low-rise homes in Toronto, and the ones we are building are not being sold to investors to rent them out. So a lot of this inventory that's increasing is just people who are either buying their homes or just holding on to them after they move to rent them. So if we look at the number of rental listings for houses in the city of Toronto, we can see that this has been increasing over time, and since 2019, they're up more than 40% in 2021. So again, a really big increase, again, during this COVID time. And I think a lot of this is driven by this urban exodus. A lot of the people who are leaving Toronto, to move to the East Coast and buy a house for $400,000 or $500,000, a lot of them just kept their property in Toronto because it's been a really great investment. And I think this is one of the key factors that is leading to sort of this tight inventory we're seeing. A lot of people just holding on to their properties. And when we actually looked at the data to understand, this increase in rental listings, is it a product of high turnover, because that's also possible, or is it new rental supply that's coming to the market, properties that were not previously rented, that had been occupied or recently purchased by an investor. And what we found in the data is it's not just high turnover. A lot of the new rental listings that had come on the market had not been rented before. There's sort of new rental supply. And again, from a lot of these investors who are either buying them now and renting them, or who they've lived in their home for, say, 10 years and have moved out and decided to lease them. So that's one of the key drivers that's driving the market right now. A lot of economists argue that this is in fact a good thing because it's adding to the rental supply, which there's some truth to that. But when we look at the rate of growth in average rents compared to average home prices, they're not even comparable. Rents have been appreciating roughly at the rate of inflation or just over, whereas average home prices are up 134% over the past 10 years. So, if there's a market, obviously, that we need to cool, it's the market for house prices more so than the market for rents. And the way, the governments could target this, of course, is tightening credit potentially on investors. In Toronto, Bank of Canada data finds that 1 in 4 homes are based, or just under 1 in 4 homes are bought by investors. So again, when you tighten credit on investors, it takes a little bit of the demand out of the market. It adds more inventory because those people who are moving have a harder time holding on to their existing property. So it takes a little bit of heat out of the market. But based on the Liberal government's promises during the most recent election, it doesn't look like that's going to happen. We're probably going to continue to see investors being a big factor driving demand and keeping kind of inventory out of the market, which again is going to probably kind of continue to drive prices up, at least in the short term. Hopefully you found that helpful. If you have any questions about this, please post them in the comments below or send me an email at askjohn@movesmartly.com.